Hello everyone. So I just wanted to make a video regarding the flash crash which happened on 21st December 2020. So I wanted to explain why it happened, and in on that particular morning, I posted my Telegram channel my view at 8:20 a.m. before the market opened on Monday the 21st. So what was my view? So I was explaining about the new variant in UK and how it's going to affect and all those stuff. And I clearly told 13,750 and 800 is going to be a strong resistance area, and we need a correction at least to this level for a further rally. Okay. So and I also told they will do a correction when you're least expected, and only if you want to sell this market, use intraday rise to do it. I mentioned all this before the market opened. Okay, so on that particular day, what happened? See, the market opened and it came down in the beginning. See, and it scaled higher and it went back to the same level, 13,760 level. And the big fall happened from around, yeah, what was the time? Yeah, actually, the fall started happening from here around 1:30 when the European market opened. Okay, so I was holding a put position, and I wanted to see what's market going to do when it reaches 13,600 level. So this was the 13,600 level. Yeah. So earlier it took a support at 13,650 level, and then I wanted to see what's going to happen at 13,600 level. Why? What's important at 13,600 level? Because it was a fresh breakout which opened up the range from 13,600 to 800. Like earlier, 13,600 to 400 was the range. They were consolidating in between, and when the fresh breakout happened, that was the level 13,580, 600 roughly. Okay, to 800 level. So when that broke, I was sure it's going to go to 13,500 to 13,400 level, somewhere in between those levels. Okay, so it went from like it only took less than 10-15 minutes to reach that level. Okay, but when then I wanted to check what's going to happen when it reached 13,400 level. Okay, because that was a support which was protected multiple times. Okay, so I knew if that level is going to go, there could be a big fall. Okay, but I never expected a large candle to appear within a matter of seconds. I never expected that. Okay, I was expecting a slow and steady move to the downside once 13,400 goes. But what happened? Because when 13,400 was gone, the algo's trigger. Okay, and because of the algo trigger, there was a flash crash of around 300 points right away. Okay, and it quickly recovered. Actually, in that same candle, in that 5 minute same candle, it quickly recovered. Okay, but that was the reason for the crash. It was an algo trigger, because 13 lot of players who are doing long term and all those stuff, who are holding a lot of big portfolios, they might have kept the stop loss at 13,400, because that was a level that was being protected multiple times. So once that was gone, then the algo trigger and all the stop losses got hit, and that was the reason for that quick sudden fall. And where it actually closed, this particular candle, actually this particular candle closed exactly above the 20 moving average, 20 DMA. See, that was the reason. Exactly above the 20 day. Even though the wick went below the 20-day moving average, it actually closed above the 20-day moving average. And on the second day, again it closed above the 20-day moving average. Okay. So that means they were clearly trying to protect the 20-day moving average to stay remaining in the uptrend. Okay, and I like this structure actually. I think possibly the rally is going to continue, and if it breaks this 13,800 level, then it opens the next 200 points, 13,800 to 14,000 levels. Okay, so far it actually looks good, and uh, if they wanted to take the market down, they would have stopped somewhere here. Okay, like if they wanted to correct a little bit more, they would have stopped somewhere here, but they actually went and tested again the highs. So probably we could see a breakout above 13,800, but we'll have to see because of this new coronavirus issue and all those stuff. But as far as I learned, that's not going to be a huge issue, because even though the new coronavirus strain is creating problem, still they say the efficacy of the vaccine can come down to 80 or 85%, but still that's good. More than 80 is good actually. And they also mention like they can do some kind of adjustments in the current vaccine to fight against the new strain. So in that way, maybe the market won't react much to those things. Okay, but we'll have to see. But you have a clear level. Once it crosses 13,800, then it goes to 14,000. But 13,800 is going to be your stop loss in case if you take a short trade. Okay, so that was the reason for that a particular fall on that particular day. Okay, so and the second day after the fall, the second day, I was actually looking for this level. See this large green bar, I was looking for this level if they are planning to protect this level, because this is a place where they actually formed a big large bar with good volume. They took a big support here after this crash. Okay, so on that second day they were actually protecting that level. See, and this is the reason I took a call position, long position from this level. And I also mentioned this in my Telegram channel. Before this move happened, like you can don't go and buy a put position, take a long position from here. Okay, not to take a long position. I told actually not to take a put position actually, because what happened was this particular candle was a large candle. Okay, so many would have jumped and say, oh, 13,200 is going to break again, so let's go and buy a put. That's why I told don't go, it's a trap, and quickly reverse and see the up move. Okay, I mentioned that one also. See, on that particular day also I posted something in my Telegram channel, and not this one. So not this one actually, yeah, the next day. Yeah, so yeah, on Wednesday, so what did the market open? Somewhere here it went down and gone back again. So I mentioned this thing on that particular day. See, it was also before the market opened. See, good morning all. Today it could be a choppy ride in the first half, but on the upside market can go to 13,600 to 650 level. Okay, but I would wait till second half to take a position today, or probably after 2 p.m. And I also mentioned Thursday could be a better day to trade. Okay, so what happened on that particular day? It actually scaled higher. Okay, see where it closed. It went till 13,620. So between 13,600 and 650. That's what I was mentioning. Okay, so this one, see, it went and closed exactly there. Okay, and what happened on Thursday? See, Thursday again, this was my morning view on Thursday. So it could be a trending move on the upside. The first resistance comes at 13,675. What did the market open on Thursday? The market opened exactly about 13,675. See, 13,670. So right at the resistance level. So it scaled higher. Then it came down, took a support, see, filled the gap, took a support somewhere here, and again scaled higher. When this fall happened, what would all the people might be thinking? See, there was a big fall from this area, so probably they are going to fall again. So everyone was having a mindset about that. That's what big players do. They confuse you. Like they don't want you along with the ride. So why did they make this move? This was a profit booking, and what did they do? They might have took a lot of people along with them in this put position to take the put position for 13,600 put and all those stuff. That's what they did. Okay, and after that they scale higher. So they wanted to write the 13,600. So I already mentioned in the morning also on that particular day, don't go and buy a 13,600 put. Before the market opened, I mentioned don't buy a 13,600 put. That's the reason, because it was going to clearly sell on that particular day. Why I say that? Because of the data I got from the previous day. See, if you go to the equity derivatives, see, this is the, 600 put, right? Yeah, 600 put. Okay, see, because of the open interest data and the price and all those stuff from the previous day, I got the information they are going to take this particular option to zero. Okay, it's not a rocket science. Like once you learn this thing, you will also understand. So this is the reason I actually told don't buy a 13,600 put on Thursday, because I knew they are going to take it to zero, the option sellers. Okay, it was good for option sellers, not for the buyers. So that was the reason. Um, See, so why that crash happened actually on that particular day? See, was RSI, it was above 82, 83 for a long time, okay? But they were not ready to take it down very soon, because everyone was saying, oh, market is overbought, blah, blah, all the stuff. But they wanted to take it down when you're least expected, okay? So they did exactly that, and they utilized that big fall with a bigger fall actually. Like they did a huge fall. No one expected this much large candle to appear out of nowhere. Okay, so and what happened? It exactly took a support above the 20 DMA. As long as it's staying above 20 DMA, it's well and good for a long-term uptrend. Okay, it's a buy on dips market. Okay, so now what happened? The RSI stabilized at 67. Now it's perfect for them to take much more, even higher, actually, much more higher. Okay, so that's the reason. I hope this video helps you all. All right, so yeah, thank you so much.